In the alternate version of exercise 8-19, Milano Gallery is going to purchase a copyright on an oil painting with plans to market and sell the prints of the original. The copyright itself fits within the major classification of an intangible asset for two major reasons. One, it's non-physical. The copyright itself is not something you can see or touch. The second important reason is it provides some type of long-term benefit, privilege, right, or competitive advantage. Keep in mind, the gallery has the exclusive right to market and sell prints of the original, which is definitely an advantage compared to its competitors, so it fits within the category of an intangible. The first entry it asks us to prepare is what we record from Milano's perspective when they purchased the copyright on January 1st, 2016. So we'll start to prepare our journal entry. The copyright is an intangible asset, so we'll debit the asset account copyright for $485,000. That's what mentioned is the cost. We'll also credit cash for $485,000. The second entry it mentions is to record annual amortization on December 31st, 2016. We got lucky that we acquired the copyright at the beginning of the year. Now we fast forward to the end of the year and we've got to figure out how to allocate a portion of that cost according to the benefits that it helped provide for that particular period as of December 31st, 2016. Amortization expense is very similar to depreciation expense. We're just trying to find some systematic way of allocating the cost among the periods that it helps benefits. In this situation, it's helping to benefit to exclusively market and sell those various prints. So very similar concept. It's just for intangible assets, we call it amortization expense instead of depreciation expense. I will mention that we amortize or allocate the cost of this copyright because it mentions it does have a limited life. Whether it's the limited legal life of 11 years or just the fact that the company itself believes that they'll probably not be able to continue marketing and selling the original past 19 years. So there's some limitation of the life, meaning we need to allocate the cost. So we use amortization expense. Not all intangibles, though, are amortized. Some have an indefinite life. For example, items like goodwill or a trademark. A trademark, for example, might be the golden arches for McDonald's. Items like that are considered to have an indefinite life. There's the golden arches for McDonald's. I think that's going to bring us in to buy burgers and French fries for a long time. We don't see an end to that in the near future. For those particular items, we don't try to amortize them. What we do is record the item at cost and then annually we test it for impairment. Now, impairment might sound like a scary word. That just means, is that item no longer worth the book value or what we currently have on the books? If it's no longer worth that, then you know what? We need to look and go ahead and record a loss for that. Or if we determine later it does have a useful life or there's a limitation to life, we need to start amortizing that. So some items like trademark and goodwill have an indefinite life and we don't amortize them unless we find later on that there's a life limitation. But we just annually at least test them for impairment. The copyright definitely has a limitation, so we're going to amortize it over its life. Now I'm going to take the overall cost because we don't indicate any salvage value for this particular item. So the cost and divide it by the life. But what life do I use? So this is sort of like straight line for depreciation. But what life do I use? Do I use the useful life of 19 years or the legal life of 11 years? It indicates that the copyright legally is going to protect the owners for 11 more years. We indicate that we use the lesser of. So whichever one is lower, either the useful life or the remaining legal life, that's what we're going to use. So if we start to build this, the cost was $485,000 divided by a life of 11 years. Legal life was 11 years. The company had hoped, though, to continue to market and sell the prints for 19 years. 11 is less than 19, so we'll divide it by 11 years. And it makes sense that it's only legally protecting us for 11 years, so that's the extent at which we want to amortize this particular item. So 485,000 divided by 11 is going to give us annual amortization of $44,091 per year. So we debit amortization expense. Just like we would have debited depreciation expense, we debit amortization expense for $44,091, and we credit accumulated amortization, a contra asset account. So this would appear as a deduction from the copyright on the balance sheet, also for $44,091. Now, this was a situation where legal life remaining was 11 years, but the company planned to market and sell for 19 years. Let me ask you, what if we change this around and the company only planned to market and sell for 10 years? What would change? Well, in this lesser of legal life or useful life, in that situation, the useful life of 10 years would be less than the legal life of 11 years. So we would divide the 485,000 by 10 years, and therefore we would have had an annual amortization of 48,500.